Folks, happy Halloween, last day of the month. Okay, what have we got? Look, we're getting to the pointy end of the year. Generally, there's a run up in markets. I mean, that's a good thing to look forward to. I'm more concerned about next year because I think it's going to be a little bit more volatile. Anyway, we'll wait and see. A couple of things. The AI story is growing and growing, but the thing I'm getting more and more concerned about is the Cape ratio keeps rising, and at some stage that'll turn around. As I've said before, I don't know when, but the more AI gets sort of touted and hyped, the more the Cape ratio will rise, um, and the more difficult it's going to be later on. That's why I'm a little bit concerned about next year or even 2027. The reason why is really simple. It doesn't matter if I'm wrong for 12 months. It doesn't matter if I'm wrong for 2 years. If the market falls 40 or 50 or 60%, which is entirely possible, the problem is you lose a lot of money. It's no good saying, and I'm not justifying it because of me, it's no good saying, oh, Steve was wrong, but I lost 40%. The fact is what we're trying to do is show you how to avoid losing money, not we're not showing you how to make the last 3% in a bull market. And it's really, really important because I think we're kind of getting there. Um, Okay, a lot happening. Trump trade and terbium. Donald went into Asia this week and did a lot of deals. And if you're following it, most of them were about rare earths. Malaysia was on the agenda pretty heavily because there were meetings in KL, but also because Lynas is there. And it's the producer outside of China. You're going to see a lot more interest in that. And other countries are doing rare earth deals with the United States as well. So what the US is doing there is getting together a supply chain. A lot of people are making the mistake of saying, "Oh, well, the US, can't do a supply chain by itself." It doesn't need to. What it needs to do is just have allies that it can share the burden with, and develop the whole industry over the next 5 or 10 years. But there will be some bumps along the way. I can almost guarantee that. Okay. The other thing the boys and I mentioned in the podcast, I think it was last week or maybe the week before, was that environmentalism seems to be getting a backseat to the economy. That's no surprise. If you think it is, just get out and drive around and have a look at how many young people are driving gas guzzling cars, and you'll see that the environment's not that much of a concern. As with a lot of things, it's nice if somebody else would do all the hard work for us. Now, the reason why I'm saying that is because Bill Gates came out this week and said, "Oh, look, climate change is not going to kill us all, and we need to focus on poverty." That's the power of change, and particularly of political change. I doubt whether Gates would be saying that if Donald Trump wasn't in power. The other thing is too, Gates has a lot at stake in AI, and he needs to get that story going as well. Okay, the US cut rates 0.25%, and the market did nothing. So that was a bit of a nothing burger. The reason why is mainly because it was expected. The other thing is that the US economy is looking a little bit more rickety. The property market's looking a bit more volatile. The stock market, is already high. A lot of companies, including Amazon and a few others, announced big layoffs. That's not because of AI, it's because the economy is falling down. That's because the government deficit is shrinking. The government shutdown is denying people money. And so, with less money in the economy, prices start to fall and companies start to make less profits, and therefore they start to lay people off. The opposite happened in Australia on Tuesday. We didn't get a rate, the inflation figures came out, and we didn't get a rate rise, or we probably won't. So that's a bit of a concern for folks who are in the property market. great if you got lots of cash. Nvidia's market cap reached 5 trillion. I roll. The other one is nuclear is going nuclear. Donald Trump said just before the meeting with Xi Jinping that America would get back into nuclear in a big way because Russia and China are. You can expect more of that. Nuclear is a really good fuel stock. The problem with nuclear is the historical problem with waste, and they're just tainted that, you drop a nuclear weapon and you kind of wipe out a small city. Not exactly a positive. So, but watch that space. I personally, I think over the next 20 years, you're going to see a lot more nuclear, because it will be touted as a quick solution, even though it takes a long time to build. It'll be touted as a quick solution for getting carbon emissions down. Okay, the Oz economy still seems to be like meh along. The thing that concerns me is the amount of investors in property is on the rise. That tells me that investors are not jumping into property because they're really lapping up that 1% yield. What it tells me is they're jumping into markets because they think they can make a lot more money on the capital gain. Maybe they will, maybe they won't. But that's a fairly high risk strategy, particularly for those on the margin in terms of lending. Okay, right. What else have we got? Lesson of the week, which I'll talk more about on the podcast with the boys, is again just what most of the stuff you see in the mainstream is really geared towards buy and hold. That way they get to gobble up all your fees, and that's what makes them rich. Anyway, the thing here again is investing is not something you can have sweeping generalized statements such as the ones below, which is like, oh, if you invest for 20 years, you always make money. Sorry, that's not really true. Even if you do make money, if you go back and look at rolling 20-year periods, sometimes you've made 18%, and sometimes you've made 1%, in stocks, that is. So you really need to have a look at that and think about valuation over time, but also don't fall for the argument of, oh, 20 years and you'll never lose money. There's a lot of people who have been investing in super for 30 years, and I have to be honest and say I don't see many millionaires out of that lot that are getting this mythical, 8% compound over the long term. Anyway, we'll talk more about that in the podcast, and I'll see you next week.